Toronto homeowners just watched the benchmark price fall $320,000 from its peak. But in Montreal, Quebec City, and Winnipeg, prices just hit an all-time record high in the very same quarter. Same country, same month, opposite directions. If you're buying or selling anywhere in Canada right now, the national headlines are lying to you, and I'm going to show you exactly why. Let's get right into the data. Welcome back. I'm Serge Bourgoin, your local real estate agent. And on this channel, I break down the data so you can make smart moves, not emotional ones. If that's you, hit subscribe. Let's talk numbers. This new data covers Canada's 10 largest urban markets. That's nearly 60% of the entire country's population. And here's the punchline. There is no single Canadian housing market. There are basically three markets happening at once. Group 1, the big corrections. Group 2, the steady eddies. And Group 3, the record breakers still climbing. Let me walk you through each and then tell you exactly what to do whether you're buying or selling. Start with Greater Toronto, our biggest metro. The benchmark price peaked at $1.26 million back in the first quarter of 2022. Today, $943,800. That's a drop of $320,300. The biggest dollar decline in the country. But here's the twist. In percentage terms, Toronto isn't even the worst. Kitchener-Waterloo is down 30% from its peak. Hamilton, Burlington, 27%. Toronto, 25%. Vancouver's off 12%, Ottawa 8%. Did you notice something interesting here? These markets all peaked at the same time, early 2022, and they've been grinding down ever since. Now, Alberta tells a completely different story. Calgary didn't peak until the third quarter of 2024. Edmonton, not until the second quarter of 2025, years after Toronto. And the drop since? Just 2%, barely a dip. Timing is everything. While Ontario was falling, Alberta was still climbing. And then there's Group 3, Montreal, Quebec City, Winnipeg. All three just posted record high benchmark prices in the second quarter of 2026, and they may climb even higher in the months ahead. No correction, no crash, just steady ongoing growth. 3 of Canada's 10 biggest cities at all-time highs, while others are down 30%. That's how different this country really is. So what do you actually do with this? Let's start with buyers. If you're in Southern Ontario, Toronto, Hamilton, Kitchener, you have leverage you haven't had in years. Less competition, room to negotiate, time to put conditions like financing and inspection back in your offer. A benchmark Toronto home costs $300,000, less than at the peak. But if you're in Montreal, Quebec City, or Winnipeg, flip that completely. Prices are at record highs and still rising. Waiting for a dip could cost you. Get pre-approved and be ready to move decisively. Now let's talk about sellers. In the record high markets, you're in a great spot. Strong demand supports confident pricing. Just don't get greedy. Even hot markets punish overpricing. In the corrected Ontario markets, here's the hard truth. 2022 is not your reference point. Price against today's comparable sales, not what your neighbor got 4 years ago. Homes priced to the current market still sell. Homes priced to a memory just sit. And if you bought before 2020, you're very likely still well ahead. Bottom line, a strategy that works in Kitchener-Waterloo would be a mistake in Winnipeg. As always in real estate, it's location, location, location. And local advice beats national headlines every single time. If you're thinking about making a move, drop your city in the comments or reach out directly. I'll tell you exactly what these numbers mean for your street and your timeline. Like this video, subscribe for more no-nonsense market breakdowns, and I'll see you in the next one.